as an investment strategist about the stuff that we were seeing, or was it more isolated in your mind?
It's definitely more isolated when it comes to what we've seen with a lot of these smaller cap names like GameStop, going up to $500 a share. But what I want to hit on first are these retail investors that are pumping up these names. We shouldn't discredit these retail investors. Stocks like Tesla, Roku, Square, Zoom, all have been home runs. They're highly held in retail accounts. Retail investors have been getting a lot of publicity because of these crazy runs in small cap and micro cap stocks that have extreme fundamental valuations. This isn't anything new, though. Stocks have been squeezed and have gone crazy many times before in history. I'm not saying you should buy them at these valuations. They're going to come back to earth. But what I am saying is that this isn't anything new. The only difference is more people have access to the markets, and more than ever, with the technology, with mobile trading and commission-free trading, becoming involved in the markets is a good thing. We shouldn't discourage participation. These are learning curves for beginning investors. These investors, they don't know how to exactly trade right now. I know I didn't know how to trade when I first started. I had to learn fundamental analysis, technical analysis. It took me a long time to learn. So I think this is a good thing right now with what we're seeing with more participation in the markets. I think you got to tune out the noise for the most part.
More participation in the markets. I wonder, and this is kind of something I've been trying to hammer home with some of the people I speak to on Wall Street. Do you feel that on balance, among the retail trading community that has been trafficking in names like GameStop and AMC, do you think more of those traders or investors, in your opinion, made or lost money during the recent volatility?
The majority of them lost money because they're late to the game, right? So they're coming in way after it's already been pumped. And that's what we've seen, with market metrics all before in history. A lot of investors from behavioral finance errors, they make a lot of behavioral finance errors by going in late and kind of chasing the hype. And by chasing the hype, that's never a good thing. So I think these are a lot of good learning opportunities that a lot of investors are learning, though, because I don't think they're going to make the same mistakes again in the future. Or if they do, again, they're going to learn from it down the road. A lot of these 20, 30-year-olds, they're getting started investing way before their parents did or even their grandparents did. So I think it's great that they're getting started early. If they're losing money right now, who cares? In the long term, I think this is going to pay off a lot by learning from their mistakes.
Yeah, but learning from their mistakes is costing people hundreds, sometimes thousands, or even more. We heard some stories about some of these investors losing millions of dollars over the course of that downturn that we've seen. Let's talk about the traditional construct for investing, because there seems to be a return to what's been working in the markets over the last several years. That's large cap, mega cap technology. Yep. Amazon and Alphabet. Do they give you more confidence in the market right now?
They absolutely do, because Amazon, Alphabet, Apple, Google, Apple, and Microsoft, they all make up 20% of the S&P 500 index. So with that high of a weighting and technology leading the way for the future, that's where you want to be. And earnings are amazing right now. I mean, they are crushing earnings report. But you have to be selective with where you're buying the dip right now. Buying the dip is a broad term in a world where some states are still shut down, stimulus is being given out like candy, and some stocks have crushed it while others have not. I think you have to stick with the winners. I think Alphabet, I think Amazon, Google, all these different companies, they are winners. I think you really have to stick with them. People are itching to, for these stocks that have taken off. We have had record levels of cash on the sidelines the past 2, 3, 4, 5 months. The markets have just gone straight up. And I think a lot of people are looking to buy these stocks, but they just continue to go up. So when they do dip, make sure you're one of the first people to deploy the capital.
Shepard Smith here. Thanks for watching CNBC on YouTube.